Morning everybody, welcome to Stockradar, Stocks on the Move for another week. Today's date is the 10th of November 2022. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, a bit of a crazy week. The Dow's down again last night. It's had a pretty good week pretty good few weeks of late. It's been the stronger industry of all of them. The Nasdaq and the S&P and the Russell have all lagged quite a lot, so the Dow's been on its own a little bit there. We've seen a bit of a boost in the commodities, gold and copper, so we'll have a look at those today. And our market's been reasonably resilient with some banks, so it's going on quite nicely. So let's have a look at a few indices and a few stocks today. Okay, so bit of background. I'm going to talk a little bit about index unaware today because that's what I do. I'm a stock-specific analyst, and that's how I prefer to do things. So I can talk a little bit about that later on. But firstly, we'll get straight into the markets and look at the Dow Jones and see how that's going at the moment. Okay, so there it is. It's run into a little speed bump up here. We raced from 28 to 32 pretty quickly. There's going to be a bit of resistance up here. It always happens. We come up, we rally, sellers start to hit, difference of opinion. And so we've come to this little area here where the average there's a peak there. We've got a downtrend line here. So this is the area we're going to expect some selling. We've had some incredibly strong volume or solid volume through here. This is certainly easing down there. So things are turning, but we need to be a bit patient and wait to see what happens a bit down the track because there's nothing clear at this stage. And if we go to the Nasdaq, it's really quite a poor picture. It's just struggling on its lows. Maybe it's trying to find a base down here above 10,000. We'll see what happens here. Volume's increased a little bit, which means there's a bit of two-way business there, which is good. And this has gone, well, it's negative and flat. So that still means the trend is down at that steady pace. So for the moment, no real change in the Nasdaq. And as I said before, the S&P 500 and the Russell 2000 have also been struggling a bit. Okay, so let's get to the commodities. We've got copper here. It's bumped up to its little resistance area here, back here at R1, and stopped. We've got a bit of volume here, so the activity is quite high there. And this is also it's easing their downside pressure. So again, too early to tell. It may be trying to base. We're still in a downtrend at this stage. It hasn't reversed, hasn't broken a trend line on average or a resistance point. So the evidence is still down at this stage for copper. Okay, so a lot of these things, we don't want to get too excited when things go off. We really need substantiation and validation of a change in behaviour. And gold is a good example here. It's had a good rally for the last couple of weeks. It's okay, not a lot of volume, but we do notice this has broken down below this area here, which is not really a good look. It's not broken down by far, you're right, but still it's a weakness. It's below the average, the trend is down. So at this stage, we still look for prices to go down. Again, that's being driven mainly by the US dollar. Okay, crude itself, it's still rotating in that R1, S1 zone, travelling around there, not doing too bad. Down a bit last night. So it's just wallowing around a little bit. We've got some good volumes here, some good on the buy side there. This isn't too badly negative here. So we're in a little bit of a holding pattern at the moment for Brent. And it's, it can be an explosive commodity, so we're not going to expect it to lie down for too long yet. Okay, well, we'll wait to see what the next direction is going to be. R1, S1 will determine that to some extent. Okay, so that's the commodities and the indices. Our market, the ASX 200, is doing quite well. It's rallying up into this area, but a bit like the Dow, it's going to run into these levels now, up around here, the R1 level here, the red line, this previous low here, this peak, all around here, the average. It's all around this area here, which is probably a bit of resistance, but the buyers are certainly challenging it. And some of our stocks are doing okay. Not a lot, but some of them are, and some of the heavyweights, as I said before, the banks are doing quite nicely, so they're okay. So if we have a little look at what we've got here in the Stockradar portfolio, it is up 3 to 22 of 183, and we've got 21 stock picks, and we've got 3 new stock picks in this week, and there's this one ETF, which is the same old one ETF that's been there for a while. Conservative portfolio is up 1 to 4 of 20. Sorry, that shouldn't be 4, that should be 6. So it's actually up to 6 now of 20. So the equities cash thing is wrong there. But it is up to 6, so that's quite good for the conservative portfolio. Now 6 stocks in there. It was wallowing around 2 or 3 for a while. Now we've picked up a couple of new ones, which is a good sign. It's not our flagship portfolio, but it's just an idea to give you an idea how a very conservative approach can still make you a reasonable compound annual growth rate of years. And I think it's averaging about 8.5%, which is not bad for not a lot of trouble. Then we go to the more leveraged stock portfolios, the Energizer 5 and the Energizer 10. They're both full. So of the 21 stocks we have, 10 of those are in the Energizer stock and 5 of those are in the 5-stock Energizer. They're doing okay at the moment. Okay, the top sectors, there's no top sectors at the moment. They are blank. Nothing is in the trending zone. And we said before, we have 3 new additions to the portfolio today. Okay, so let's get into some stocks. Okay, first one off the rank this week. Well, I went through a couple last week. We saw Ansell, which has had a bit of a rally through. Lifestyle Communities hasn't done anything. Either Transurban or Macquarie, they both had a little bit of a levitation off those low points, which is quite good. Qantas is going along quite well, so as is AMP. Power Holdings is an interesting one at a new high. A little bit volatile, but it's a bit of fun. And then Nanosonics we reviewed last week. And of course, Domino's dumped as soon as I had a bit of a talk about that big volume, so we'll have another look at that a bit later on as well. Okay, but the QBE first off. We've been travelling in this zone for, gee whiz, 18 months or so now, between about $12.70 and the low there about $11. So that's been a pretty tight range for QBE, but it's a bit above the lows there, which is always a good sign for me when I like that sort of pattern. And this is now starting to emerge from that point there, which has been a big resistance level for quite some time. So this is a very good sign here. We're getting a general pickup in volume without going wild with excitement. Momentum is just ticking above zero and starting to expand. So the picture is starting to look good. The trend intensity rating was +1 as of last week. Okay, now we've had a little bit of a break. A couple of positive things have happened here. So that trend intensity rating will change for next week, provided QBE finishes the week up above the R1 level there. So looking very interesting QBE finally, and we did notice that you may have noticed that another insurance stock came into our stock pick a few weeks ago, Insurance Australia. So is there a groundswell happening there? Very low risk, low priced stocks at the moment. Okay, now on the leaders board, we just want to go through a couple here. Firstly is Telstra. It's actually been quite interesting of late because it hasn't gone down with the market. It's held up really well, and I quite like that because we've got the big low pattern down here, I think at 260. Then we had the rally up to here. Did get through there for a while, but it failed, and so we got stopped out. So we've been pretty neutral on this stock for a while since this uptrend here. And it's now had a couple of attempts there, one meagre attempt and a better attempt. Each time it's fallen back, but it's come back to this S1 level, and that's quite high, for a correction. So it's not a very deep correction, so that means that there's probably some good resilient demand. And when I look down at this profile down here, there's some nice green bars occurring, especially more recently in some of these rallies here, okay? So some fairly good two-way business, little red bars, a few red bars there sending it down, so it's by no means a fait accompli. So we really need this 420 level to break if we're going to get excited about Telstra. But the encouragement is there, so it's one for the watch file. Unfortunately, I can't do any better for you in that at the moment. Okay, the other one, of course, is Woodside, which is finally, it's been a long time coming for Woodside shareholders. We saw it, back in 1920, it had a good rally up to around where we are now. Then it collapsed again, right back to 16. COVID hit and all sorts of things went wrong. Now the stars are starting to align for Woodside, and the buyers are starting to get back onto this stock again. So we're now seeing some pretty heavy volume go through here since the entry of new high entry back here. You can see these line with the stars, the momentum is above zero. The volume, it's above the average, and we get a price break. So that's took a bit of time to get on its bike, but this last few weeks it's had a very strong market, and this is a fairly significant level here. Remembering Woodside's come from a long way up. It was a $70 stock quite a long time ago, so we're still down the lowly $40 at the moment. So there's plenty of potential here, and this is a fairly key, significant level. It's been there for 3 or 4 years, and if it can get through there, that will be a mark of confidence in the stock. And with the outlook that it's got at the moment and the current oil environment, then you would think that and gas, you would think there's plenty of upside in this stock. So the next resistance is at 45 for Woodside, and it's looking quite good. Okay, now just to the gold stocks. Okay, everyone wants me to look at the gold stocks because everyone's talking about the gold stocks. I'm not that enamored with them as yet. There are some that I like, but as a general rule, the gold stocks are still struggling. We've had a bit of weakness in the US dollar, which has caused the gold price to jump a little bit, but not much. But we do have the benefit of a lower Australian dollar, which is also affecting them. So it's an interesting situation because some are doing well and some aren't. And Perseus is one stock here that I looked at today, and it's actually making new highs. It's had a very good rally for the last few weeks from 135 to 205, a big move. I tend to think there's more happening than than just the gold price with Perseus. But you can see here, if I just blow this volume up here a little bit, we can see these great little levels of demand through each of these rallies here. Even this one in here, we can see a good bit of volume through there, and now here again. So we've got the MACD starting to move above zero. It's above the average. So this was of last week. This is actually wrong, this trend intensity rating. It should be more like from last week. It wasn't a plus. It probably was about a +3 last week. And if it breaks above here, it will go to qualifying rating. So sorry about that, but that one is wrong. So Perseus is one of the gold stocks that does look very interesting. It's making a new high, and as you know, we always buy new highs with the proviso that these stocks are volatile and dangerous, and you've really got to watch your back very closely. And they're very hard to pick, some of these gold stocks. Okay, Northern Star, one of our bigger ones. Again, we had a good rally last week. We've got some good rallies here. We've got some good volumes through here. I'm just not getting a clear picture of what this stock is doing. It's certainly still in a downtrend here. We've still got this line going down here pretty well, so that's still there. But I've got no real price action here. What could have been a trend reversal here was too small and didn't attract much trend intensity there. So there's really nothing for me as yet. So what I'm really looking for here is a rally, a pull back to a higher low, and then we continue on from there above the high. So it's a start, but I'm not really looking for much at Northern Star at this stage. The trend intensity rating is still -6, and it's starting to make a comeback, but substantiation is what we need. Okay, IGO is another excuse me, is another gold stock that we actually hold. Excuse me. It's recently made it's recently made a new high, and it's continuing on quite well at the moment. Trend intensity rating is +8. Now we've had some big selling here, which has been in the high bar here, which is always an interesting situation. But the buyers seem to have come back straight back in here. Not a lot of volume, but this week hasn't finished yet. So I'll be interested to see what happens with this week, because that's a big selling phase. It's gone, a big chunk of selling that's gone through there in the face of a rising trend. So we've got to watch that, observe it, and see what happens in subsequent weeks. At this stage, the price damage is not too bad, but we're above the average. The volume has been good, apart from last week, and the MACD is good. So again, it can be volatile, these stocks. Don't watch them when you've got a profit. You make sure you protect them, okay? And then the final gold stock I want to look at is Newcrest, because that's our leader. It's really not done very little. It's at a big break of support down here. It's in a downtrend. There's no real sign of much here. There's a couple of green bars here, which was a long way back, but nothing really. The downside momentum might be slowing, but that's about all we're really getting at the moment for Newcrest. Not exciting me one little bit. So there might be a couple of little gold stocks there, Independence Gold, Perseus, a couple of other ones that I've noted, but for the general rule, based on the gold price, these stocks are probably going nowhere. Okay, so that's the gold stocks I just want to go through for today. One of the smaller stocks I wanted to have a look for you. I looked at Power Holdings last week. We're looking at Data 3 this week. It's up at a new high. If it breaks through here, it makes a new high. It's again a bit like Power Holdings. It's got a nice little 2-year consolidation phase below it here. It's tested the support here quite a few times. It's broken through these peaks here, and now moving to the ultimate high there. So it's on its road pretty well, Data 3, and it looks pretty good. Volume is not really knocking my lights out. It often doesn't with some of these stocks, but momentum is good. It's above the average, so generally, weight of evidence, things look pretty good for that one. So that one certainly looks good for if it does close above that R1 level, it may well be an interesting buy. Okay, remember, work with your stops. Okay, Domino's, which I promised you we'd have a look at, and of course we did, because we looked at this last week and we saw all this lovely volume, and I hope you all didn't go out and buy it straight away, because all I said was this is the start of something, support start. But about an hour after I spoke, bang, sure enough, down goes the price and a heap of volume. This is not uncommon in a bottoming situation. It's not all of a sudden it's going to go change and go one direction. It does sometimes, but very rarely. So it builds a base, especially after falling from $150, $60 to down to around $50. So people are nervous, and there's plenty of people ready to sell at any rally. So all that's got to be cleared out. So for the moment, we've got good support down here at 50. That's worth watching. And we'll have to watch the development of this and build the evidence for a buy case. But at this stage, that volume certainly was a knock of confidence, and Domino's is not going to have a one-way ride higher at this stage. Okay, so we've got lots more Stockradar, plenty more happening there, plenty more stocks moving into the neutral trend intensity zone. Some good opportunities there for you. What will be the next big thing? Well, we're always on the hunt for that if we can find it. Okay, so now I want to go into trading tactics. This is really just a fairly brief one today. So focusing on stocks is what I do basically. So a lot of people ask me the question, do you look at sectors, do you look at indices? No, I don't really, because we don't trade the index, or I don't trade the index, and I don't trade sectors. It's an interesting proxy for some stocks, but it doesn't necessarily mean they're going to go in that direction. So I much prefer to trade stocks based on the specific price action, which is more like a bottom up. In fact, I don't even go up, I just stay on the bottom, which is right down on the stock specific analysis, because a lot of stocks move in different directions. So as I said, I don't look at the index. I talk about it to you so you can get a bit of an idea about it. I talk about the sectors, which is really just an arrangement of my presentation of my stocks, so some way to show them to you. So, but I don't really trade them, so it's not really my thing. So stock-specific analysis is more what I do. Price of an index doesn't necessarily relate to a stock. It's like an average or a proxy, and I don't know if that's good enough to do it. So sure, some investors use them, use indices like the ASX 200 to do a switch on, switch off to their portfolios. They might decide when the index has gone down a certain amount, they might switch off, and that's fine. But all you need to do is make sure you have a strategy and you stick to it. And my strategy is not to use indexes or indices, but rather take a stock-specific price action. And I do notice that often when things are the worst, that's when you get your best stock picks. And it could have been some of those coal stocks. It could have been, quite a few stocks that, rise from the ashes, and they're great opportunities when you get the signals. If you can blink out everything, it is quite an interesting situation, and it's quite rewarding to do that as well. So it's about deciding what you're going to use and not going to use, and sticking to it. It's your strategy, and I choose stock specific for myself. So you never know what's going to happen. Anything can happen in this market, and anything invariably does. And the stock market always surprises. So taking averages and generalities is not really the right thing to do if you really want to get on some good stuff. What we do know is that trends exist everywhere all the time, and that's our thing. Stock-specific trends is what I'm always trying to identify, because that's really what I do. Okay, so there are many other stocks that offer counter-trend or counterintuitive opportunities that we might otherwise discard. And the important thing is, I've talked over the last few weeks, to me, it is the big winners where I make my money. And you see my win-loss ratio is down around 45-50% at the moment on some of my portfolios, but I'm still managing to win because my big winners outweigh my lots of little losses. So it's important that I get some of these stocks into my portfolio and don't be blinking by an average to say, well, the index is going down and I'm not going to buy it. So things like Computershare, Whitehaven, they've been some of our biggest winners, and they're very, very important to our returns. So stock-specific analysis is what I do, and that then builds and drives our high conviction portfolio approach. So once I get onto a trend and it's a good trend, it stays in the portfolio. If it's not a good trend and it fails, it falls out. So things like Computershare and Whitehaven will stay in for a long time because they keep trending, and that's how I build the portfolios. And if there's small ones to chop out, then I chop them out and make sure my losses are small. So that's how we do our high conviction approach and keep it focused towards trends. Okay. So focusing on stocks is what I do. I just want to talk a little bit about that today, just so you understand more about where I'm coming from and what I do. Focusing and analysing the things we trade rather than using proxies, i.e. indices, drives a course for better understanding of a stock, its price action and subsequent responses, i.e. is it trending or not. Okay, thanks everybody for listening. Stay safe, watch your trends, heed your stops. Give me a call if you need any help, you need a chat. And I'll see you all again for next week's Insights. Okay, thanks very much.